We are joined by Mr. Rajiv Jain, who is the CEO of Bajaj Finserv Lending, on the line from Mumbai. Mr. Jain, thanks very much for speaking with us. With stabilizing core inflation and slower IIP growth, what are your expectations from the RBI in terms of what they could do on the repo rate as well as the CRR?
Right. I mean, lots has been said about it, but would we like a cut? Yes. Would we get one? I'm not so sure, given where the inflation data is yesterday. So, can an investment cycle get recreated at a 11-12% borrowing rate for commercial projects, 12-12.5% for commercial projects? I'm not so sure. So would we like it? Yes. Would we get it? I think we'll know on June 17th.
What is your expectation going forward as far as the overall business is concerned and demand for finance in your setup or the segments that you operated is concerned?
Our view is that, that the transmission of interest rates overall will take time. Even if Reserve Bank was to cut, we have not seen significant transmission of the 50 basis points and the 100 basis point CRR that happened. I mean, the base rates have all been cut by maximum of 25 basis points at this point in time. So the transmission is clearly taking much longer. So we are already virtually getting close to end of Q1. And if transmission is only 25 basis points, even with RBI further cutting rates, I'm not so sure that the entire demand cycle can kick in before the third or the fourth quarter of the current fiscal. So that's our house view at this point in time.
Right. What do you think the demand environment and if we do get rate cuts, what do you think the change in the demand supply situation will mean for asset quality concerns which have been plaguing the industry for a while now?
So we are a diversified lending company, so I would break them into three. I think the consumer assets demand continues to remain reasonably strong so far, both whether on the consumer durable side, which we are in, or in two-wheeler financing, or for the personal loans business. On the SME side of the business, has demand slowed? The answer is yes. We remain very focused on a niche set of small and medium enterprises, so we have so far been okay. But has demand slowed? Yes. On the infra commercial side, which is our last category of business that we're in, clearly things have slowed considerably there, both on account of slippages at a broader industry level and in terms of demand. Net, I think, when we look at the diversified model that we pursue, I think we should still be able to grow 20-25% on assets and on net income for the current fiscal at this point in time.
Right, and no concerns on the net interest margins as well as the NPA levels?
As I said, transmission is not through, so I don't think we will see a NIM compression, at least for the first half of the year, given that first quarter has gone by. And NPAs, I think it will be tough to take a full year view at this point in time. It would be appropriate to take a first half view and then take a second half view. It's a little too premature to take a full year view on NPA at this point in time.